So it's a pleasure to have you guys with me on this inaugural webinar tactic date. All right, just to give you guys a little bit of a rundown of how it will go, we're going to start out by going through the definitions and the keys and the tactic using words, so you guys have a reference point. We're then going to go into charts and look at how the tactic plays out on various charts in real time. And then after that, we're going to be looking at random charts that you guys want to look at, and we'll see how it matches up there. My goal here is to give you guys a tactic that's extremely easy to utilize. All right, there's lots of crazy stuff, GAN and all these other things out there, Elliott wave and so forth. For the average investor and even many traders, it's very complex and time consuming to do the calculations. This tactic, you can literally pull up a chart and see if it's a buy at 52-week lows or a short at 52-week highs in a matter of seconds. And I think that's why it's so useful to most of us out there that are looking for something simple yet very pure and high percentage win rate, a high percentage win rate with it. All right, so again, guys, welcome aboard. I will be taking questions throughout this, but for the most part, I would like if we keep the questions towards the second portion of it where we get into the charts. But again, if you have an urgent question, of course, I'm more than willing to answer it throughout the course of this webinar. In addition, those of you that are here on the inaugural day, you will get a link to the recording of this webinar, and you will have access to it for 30 days following this presentation. So it makes it nice that, I don't expect you guys to be able to nail it down 100% in the hour that we're going to spend on this, but by being able to go back, you can go look at charts individually on your own, and then if you have questions, you go back to the presentation, and hopefully those questions are answered by just looking back in this presentation, in this webinar. Okay, so let's get this party started here, and let's get right into it. So, falling knife buy, RocketShip sell signal. It's a chart tactic that can change your trading and make you more profitable, which is ultimately our goal for even me as myself, being a trader for as long as I've been a trader. I'm always looking for new tactics that can improve my win rate even above what it already is. All right, and again, thank you guys for being here on this inaugural day. Let's go into what it is. So what is this tactic? This tactic allows any trader or investor to quickly analyze whether a chart is making a new 52-week high or all-time highs, whether or not it's a strong short. So again, if a chart is going vertical, how many charts do we see, especially these days, that are just up and away, and it's hitting new 52-week highs almost daily, and you want to know whether or not it's a good shorting opportunity. Again, this tactic will tell you that. The same thing on the reverse. This tactic allows any trader or investor to quickly analyze whether a chart making new 52-week lows or all-time lows is a strong buy. So again, there's always a handful, even in a bull market, there's always a handful of stocks that can't get out of their own way. The question is, when do you buy it? It's a falling knife. If you listen to the media, if you listen to the average investor out there who really doesn't know anything, they say, don't catch a falling knife. It's scary. You'll get cut. Well, guess what? As you guys know from the trading that I do, and you've been following me for many years, many of you guys, I do it on a regular basis, and I'm going to give you one of the tactics that I use to find out if it's a good buy. All right, what is used? So this is an easy signal to see and can be read in seconds. To utilize this tactic, simply put an RSI, relative strength index, on any time frame of any chart. It works on anything with a chart and an RSI. So in reality, you can trade crypto using this method. You can trade commodities. You can trade currencies, stocks, ETFs. It doesn't matter. If you can get an RSI on that chart, this tactic will alert you when to either go long or when to go short. All right. This signal utilizes divergences in a specific way, using specific levels that must, I repeat, must be followed for it to be read correctly. And that's the biggest thing about this. There's no gray area. You have to look and see what is this saying and what is ultimately it translate into the chart. And I'm going to show you exactly what that is here shortly. All right, how to use this signal properly. On a RocketShip chart, new 52-week high, all-time high. 1, find a chart that's hitting a new 52-week high or an all-time high. All right, look back at number 2. Look back and find the last major pivot that was the prior 52-week all-time high. So you're looking at the history of the chart. You want to know when the last major pivot was made. All right, that's very important. And the current time has to obviously be making a new higher high. So therefore, it's obviously a 52-week high in this situation, right? Or it could be an all-time high, okay? Now, the key here is it must be at least a month earlier for a valid prior pivot high. So you can't just look at a chart that hit and we're talking about the daily chart here, but you just can't see a chart that hit a 52-week high yesterday and then it's hitting a new 52-week high today. So remember, this is where you must understand what a pivot point is. So a pivot is basically like a mountaintop on a 52-week high. So you should see it rise into that and then pull back, and it creates that top of the mountain formation. That gives you a former pivot high when you get that pullback. Then you're looking for the chart to go up again and make new highs. All right, that's very important. And again, a lot of words right now, but bear with me because we're going to get into the charts and it will become super clear. I always learn better from charts and looking at pictures myself versus just words. Okay, next up, number 3, make sure the RSI on that prior pivot was above 70 as a reading. So you want to look at that RSI on that first pivot high that you're basing the next move off, the new pivot high off of, and you want to make sure that essentially it was in the extreme overbought category. I look at above 70 as a reading. All right, on the current 52-week high, so now we're back from looking at the past one, which was a reading above 70. On the current 52-week high, new all-time high, the RSI needs to be below 70. Okay, so in other words, when you see this divergence above 70 and currently below 70, but the stock price is at a higher high, the stock price is basically telling you that there's distribution going on here. Okay, that's very, very important to understand, and that's why this tactic works so well. All right, how to use this signal properly on a falling knife, new 52-week low, all-time low. So it's basically the reverse of what we went over, but let's go over it again. All right, so number 1. All right, find a chart that's hitting a new 52-week low or all-time low. So that's easy, right? I mean, we can all scroll through a bunch of charts. You could probably even pull up a list by Googling or on any of your platforms, and you can look at new 52-week lows or new 52-week highs. So that would be the first step that you go to. All right, once you have that list or once you have a specific stock, you look back and find the last major pivot low that was the prior 52-week all-time low. Note, it must be at least a month earlier, like we said, if you're keying off the daily chart, okay? Make sure the RSI on that prior pivot was below 30. So we're going into extreme oversold on the RSI. So it has to be below 30 on that first pivot low. On the current 52-week low, which is the new pivot or the new potential pivot, the RSI needs to be above 30. Now, does it matter if it's at 30? It can be at 30 as long as it's equal to. It just doesn't, you don't want it below 30. All right, so at 30 or above, so it could be at 31, 35, 40, I mean, anything in that range. That's okay. All right, in other words, the stock price should be at a new all-time low compared to the last major pivot low, but the RSI needs to be higher at the new low. So essentially what you're looking for here is what's called a divergence between relative strength, meaning that in this case, the stock is getting stronger based on the relative strength index, but the price is actually lower than the previous low. All right, very intriguing there stuff. All right, what does it tell us? When criteria is met for a short, the signal is telling us investors and traders, it's telling us that there is a massive amount of distribution going on. Okay, so think about a chart that's at all-time highs. When you see the relative strength lower than it was at the prior pivot that was lower, even though it technically should be higher because you're making a new high, it's telling you that there's institutional selling going on here. There's a ton of institutional selling going on. Okay, when criteria is met for a buy, the signal is telling investors, traders that there is massive accumulation going on. So it's the opposite. When a stock is making a new all-time or new 52-week low versus the prior pivot, but the RSI is higher than 30 or equal to 30, it's telling you that big boys are accumulating. And really, that's what we want to follow, right? I mean, in reality, those companies like Goldman Sachs, JP Morgan, the biggest hedge funds that are worth 100 billion or 500 billion or whatever it is, they're the ones that are going to have the information that us as average investors and traders just don't have. So if they're accumulating, chances are they're doing something smart here. We want to know about it and we want to be able to act on it. And that's what this signal will allow us to do. Okay. So when do you buy or short? I mean, when on earth do we buy or short, and short how much? So let's go over it here. In the case of shorting, which would be at a chart at 52-week highs, you short when the stock price exceeds the previous pivot high and the RSI is at 70 or below and lower than the previous pivot high's RSI, which was 70 or above, right? And again, what you're going to do here, and this is very important, you don't go all in. And I'm going to explain to you later on. This is one of the reasons why in verified investing, I do half positions. All right, you do a half position in this case. All right, let's look at buying. When stock price breaks the previous pivot low and RSI is at 30 or above, and higher than the previous pivot low RSI, which was below 30, same thing, buy a half position. So in the first case, we're looking to short. We short a half position in that scenario. In this case, we end up buying a half position, okay? When do you add your second half? Very important, and you guys can go back on this. So when using this tactic on a large cap or a single ETF, if you ever are out of the money by 3%, and I've calculated exactly in hundreds of scenarios, and this has an amazing way of working, you add the other half. So again, if you're shorting based on this signal, and you short it at, I don't know, 50 bucks, you know, at 51.50, which would be a 3% move, or 52.50, not 350, yeah, about 51 and change. That's when you would pick up your next 1/2 position. You'd add your second half. On a mid cap or a 2 times ETF, it's based on 5% when you're out of the money. And on a small cap or a 3 times ETF, it's based on 10% out of the money. That's when you add it. Okay, and this is really important because this signal is going to tell you when a stock is in the rolling over pattern. But by utilizing this, and I back tested this exponentially, you're going to get a much better entry. And then when the rollover comes, you're going to bank much, much more. Now, the last little note here at the bottom, and you can see it right down here, and I can highlight it right here. Note, stop is anytime the RSI goes above on shorts or below on longs, the RSI from the first major pivot used to take the trade. So for instance, if you had on a short trade an RSI that was initially on the first pivot, let's say 75, all right, on the second pivot, you short it, let's say if the signal tells you when it's at 70, if the RSI ever gets above 75, you exit the trade because the divergence is no longer valid there at that point. It's no longer a divergence. Now it's following exactly the way it should be. It's higher high on the RSI, or a high on the RSI and a high on the stock, and then a higher high on the RSI and a higher high on the stock. So there's no divergence there. All right, same thing on the reverse. Below on longs, when the RSI, let's say the RSI, the first pivot low is at 20. If ever you get below 20, then that divergence no longer holds. In addition, as always, you want to keep some sort of mental max exit just in case. And again, you need to abide by that then as well. All right, let's get into some charts. Ah, yes, the fun part. So we got through kind of the hardcore definitional stuff. Now I want to get into the charting of this. And this is where, to be honest, this is where it becomes clear. All right, the definitional stuff is important because we need to know it, so we know what to look for in the charts. But this is where, again, easily it'll become much, much clearer here. All right, so let's look at Overstock. All right, now we all know Overstock had an epic fall here. I mean, just an absolute catastrophic collapse from close to $30 down to basically almost 10 bucks. All right, now the question is, did this signal tell you it was going to happen? Well, and again, the signal doesn't tell you it's going to drop, 50% or 70% or whatever. It just tells you something is coming on because smart money is getting out. Now, what's interesting about Overstock is that after this stock had fallen down to about 15, we heard that the CEO, which had just left the company, had just sold like 5 million shares. So again, remember how this signal tells you that something is going on. When the relative strength is not in line, when there's a divergence, it tells you that the thing here is it's essentially telling you that something's going on. And if you can understand that ahead of time, not only can it save you money if you're long, but it can also get you in on the short side. So here we go. So here's a pivot high, right? Pretty clear pivot high. I don't think anyone can deny it. You had an up move here. Here's your high. And then you had a pretty nice pullback. We would consider it kind of a choppy mountain, but here's your mountain top and here's your back off. So that's a mountain top right there. We would classify that as a pivot high. Now looking at the RSI, okay? See the RSI was above 70 there. You get that little gray area, which is the beautiful thing about stock charts. And that's the website I use for this, by the way. It's just an easy website. You can pull it up, type in your chart, your symbol, and you can pull it up very, very easily. But very obvious to see the overbought scenario there above 70. So right off the bat, that tells you to be on alert. Now, as it falls, it comes here, we come down. And then as you rise, notice how you made a higher high here. Now, in theory, the RSI should be higher, right? I mean, it's a higher high. Why isn't the RSI higher? Now, if you look at the RSI, what did it do? It was lower. It basically kissed 70, which is lower. So here it's higher, here it's lower, here it's a high, now it's higher. That's a divergence. Notice the downsloping line from this high to this high, the upsloping line from this to this. That's a divergence. So what you do based on the technical signal, you short it as soon as it exceeds the previous high. That would be your first 1/2 position. So here it would be at around 20, looks like about 27. So when it exceeded 27, you'd pull the trigger on a short, okay? Now, so you're in it at 20, let's call it 27. We'll just call it even 27. Now, if you use the method, this is a small cap, 10% higher, you would short your second half. Well, we know that $3, if it was at 30, would be 10%. So it would be about $2.70, which would give you $29.70, which is just below the pivot high. You enter your second short. Look at what happens. Look at that drop. Amazing. Now, again, as a trader, as an investor, would you ever have the guts to hold it all the way down to 12 or 10? Probably not. But the point is, it creates a scenario where the profitability factor rises exponentially. And that's the beauty of what we do here, folks, is again, I just want to give you guys tools that will increase your profitability that you can use on your own. Nick and I are all about the teaching side of things, and we love it when you guys come out, and I'm so happy to have you all here learning this stuff, because again, this is essentially teaching you how to fish versus just giving you a fish. All right, so let's look at another chart. Visa. So let's see what happened with Visa here. So on Visa, here it was rising up, rise. Okay, you got to a point of overbought, but let me ask you a question: did that create a mountaintop? And this is where it's going to get a little bit of nitty gritty. You have to be able to decipher. So the question is this a mountaintop? And the answer is simply no, right? Because it came back a couple days and then made a higher high. So obviously this isn't a mountaintop. So you wait patiently, and then you see the dip here, and then you look. Once you get the dip, essentially the mountaintop, which is very clearly here with this big dip, that's where you say, okay, it was overbought, it was above 70. You can see a little gray right there, just above 70. All right, so that creates your first pivot high using the RSI and the mountaintop. All right, now it starts to chug along. So basically what you're doing now is you're being patient. You want to see if this makes a new high, but if the RSI doesn't get above 70. Well, guess what? Here's a line, and we can put it right across here. Right on this date right here, so at approximately $185, it made a new high. You pull your trigger, and you short half position. Now, if you look, for the next couple days, now notice I'm pulling the trigger because the RSI here didn't get above this trend line. See? So here it's above. Here's a new high. Here it's below. So there's your RSI that tells you it's a divergence, downsloping trend line. If you draw a trend line from this high pivot to this, you get an upsloping trend line. All right. So here's your high pivot right there. So again, let's say 185, you pull the trigger on a short. Now this stock did go up a little bit more, ever so slightly more. And then what did it do? It rolled over and continued down, all the way down below 170. So basically from a short of 185, you had a chance to go down to 170. Now, where would you take your money here? Well, the obvious, as a trader, I mean, it's pretty obvious to see, but see this pivot low? Draw a trend line right across and right there. That would be an easy opportunity to exit right there. So good for about $15 on the short side right there on Visa. Okay? All right, so we have two charts there that, again, have a few different little characteristics, and that's my goal here when I was choosing charts, is trying to find different scenarios. One scenario where you actually have to add your second half. Here's another one where you didn't have to add your second half. Here's one where you have this scenario and so forth. Let's take a look at Uber. Now, you guys know we played Uber in verified investing, and I also had this as a trade in verified options. So anytime you see me, those of you that have both services, anytime I do both I buy a position and I buy the call options or the put options, chances are there's a pretty significant signal here that's telling me something. So let's look. All right. So here we have a scenario where we have a pivot low and then the bounce. So does this create a valley? Remember, a mountaintop, what's the inverse of a mountaintop? A valley. So in this case, here's your down slope. You're making a new low, pretty much a new all-time low here. And then you started to float up, creating a valley. All right. Now, once we see the valley, and we verify it's a new 52-week low or all-time low, we go to the RSI, and we notice that it was below 30. Okay? Below 30 right there. Now, it's a waiting game at that point. All right. And you just kind of sit back, you let the thing trade, and what you notice is, oh, look at this, it's starting to come down again. It makes a new low pivot, okay? Now, in this scenario, what you could have done, here's your low pivot. You could have easily pulled the trigger on a long when it broke this low, which would have been right around 30 bucks. Now, I got in a little bit lower than that because I was just patient and I figured it would get below the 30 level. But either way, here's your next low, and look at the RSI. It's above the line. Here it's below the line, here it's above. Put a trend line in from this low to here, it's upsloping. Trend line from here to here, it's downsloping. And you guys know what happened. We obviously took a profit on this. I think Uber was even up again today. So I think Uber got as high as like 31 today or so, even maybe a little bit above that. But either way, here's a long trade where the signal worked out beautifully. And we actually participated in this one, both in verified options as well as verified investing. Okay. Let's go to another chart. And again, my goal here is going through a bunch of charts And then what I want to do is obviously we're going to look at some random charts that you guys want to look at, and we can see what the signal's telling us. And my goal is I always want to look at charts and see if there's any situation where it doesn't work, which ultimately it will, right? I mean, there's always going to be a certain point where the RSI breaks that low pivot or something of those sorts, and then you want to stop out. Or if it doesn't happen to do that, but it gets down enough, you obviously want to have your max out level as well, okay? All right, so let's take a look here. Here's Disney. So going back on Disney to earlier this year, here was a super sharp rise, pivot high, RSI obviously way over 70. Look at all that gray up there, which is marked by when it's over 70. And here the stock falls back down. What does that create? It creates an unbelievably sharp mountaintop. All right, now here comes Disney. And this is a little different because this is a scenario where the trade didn't play out right away, which is okay. So up, up and away, here comes the stock. Here, it breaks the high pivot. And look at the RSI. All right, it's just below that 70 level. So right off the bat, that's it. That means, okay, I give this a shot with a half position. So right there, and that's approximately at 142. All right, now the stock comes back a little bit, comes up, starts making a new high. What do I do? Do I do anything yet? The answer is no, because it's not it's a large cap. It has to go against me by 3% or more before I pull the trigger on the second half. So up here it goes. I'm a little out of the money by a couple dollars, no big deal. That's less than, basically 1%, 1.5% out of the money. Then it comes back here, comes down a little. I'm in the money. Then it goes up again. And at this point, it's 3% higher, give or take 0.0%. All right. And I pull the trigger on my second short. Now, all of a sudden, my average is right here. Gets me in better position. All right. Now, again, notice the signal is still valid. You never took out the high pivot from here at any point along this RSI line. All right. So there's nothing that tells me this isn't going to work out. As a trader, I haven't hit a max loss. I'm only out of the money a couple dollars. It got to my 3% level. I pulled the trigger on the second half, and I'm good to go on this short. Now comes the gravy. Look at the fall. So from an average price of approximately 144, the stock falls all the way down to about the 132 level. And you could even wait even longer. This would have been kind of my target down here. See this area right down here? And then it kind of bounced up, but eventually it came right in there and good for about $12 on the short side. Okay? I hope everyone's kind of starting as I'm doing more of these charts. It's really, the definition makes it sound more complex than it is, but it's really not that complex of a signal. And again, I can literally look at a chart. It'll take you guys a little time of practice, but you'll be able to look at a chart and look at this indicator, and you'll be able to see it in very short matter of time. All right, let's look at Goldman Sachs. Okay, so here's Goldman Sachs. Goldman Sachs moving up, up, up. This was in June, July, and almost to August. And then just around the beginning of August, you made a pivot top, and you started to fall sharply. That creates, what do we call this? The mountaintop. Okay, now what is my first step? My first step is to look to see what the RSI was at the mountaintop. So I go back and I look, oh, look, it was overbought. All right, so this means game on. It doesn't mean I take a trade yet. It just means I'm on alert or I'm watching, okay? Now the stock again had fallen back. It starts to incline, 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 and just briefly, look at this. Here's your high, and look at this. It breaks the high by a mere amount of pennies, maybe 50 cents here on this. Well, guess what? The RSI never broke 70. Cha-ching, the trade gets initiated right there on the short side, okay? So you're in a half position, short. In this situation, it doesn't even go against you more than a few pennies, and it pays off handsomely. What would be an obvious target? This little level right down here at double bottom, and it goes right there, boom, 195. So from 220 and change down to 195 very, very quickly. Now, as I said, some of these can take a little time to play out, but ultimately, it does seem that 8 to 9 times out of 10, these play out, which is an incredible stat for one signal. Now, again, those of you that know the PPT methodology, you obviously want to, if you can add this signal with some other PPT factors, that's the whole holy grail. Okay, but even by itself, this signal has an amazing amount of success. All right, now let's look at a situation here. Okay, let's look and see. So we have a trade here on Nike, or potential, a chart on Nike. The question is, do you ever get a trading opportunity in this chart? Okay, well, let's see. Let's look for overbought. All right, so at the high here, was it ever over 70 on the RSI? Nope, it wasn't. So there was no initiation for a watch there. Now it comes down here, and it does get below on the oversold. It gets below 30. So what happens here? I start watching, or and again, watching is a relative term. The key is more you just want to check back on it once a week or so. Or if you see it on your radar hitting a new low, then you'd get kind of excited about that. All right. And even in that case, it really wasn't a new low since it was over here. So the question is, do you even pay attention? But we'll just call it, let's say it is okay in that scenario. But my point here is that the chart rallies up. It never makes a lower low. So you would never take this trade. And again, I picked this on purpose because I want you guys to be able to see that sometimes it says no trade, and that's okay. There's not always going to be a trade alert from this signal, and that's good because you want to know if there's no signal there, good, then ignore it, then go on to something else. Now, just in recent days, in early October, we did hit a new high here, and it did get overbought right here. So now you've backed off on your RSI, although again, it hasn't had enough time between yet to signal. But if we went sideways on this and then made a move up and it didn't get above 70, then you could initiate your short on Nike. Okay? All right, JP Morgan. All right, let's take a look here. So going back in the chart, here's a pivot high. You obviously had to move up into that. Then you had to pull back. That's a mountaintop. RSI was overbought. Then you came up here. Let's just make sure. Was it above the previous high? The answer is yes, just by a little bit. Look at the divergence, well below 70 on the RSI. So you have a down-sloping trend line here, a slight up-sloping trend line here. It tells you pull the trigger on a short, boom, down you go, right into double bottom, right there as a target. Okay, now here's a low pivot, but look, you never got overbought, oversold. So there's nothing to watch at this low yet. There's nothing to watch. All right. Now, interestingly enough, you did briefly get above this previous high right here. So now you reset and you say, okay, you're above it. Now, if we push up above, now assuming that RSI doesn't get above this high here, not above 70, it can hit 70 or below, then I can initiate a short on JP Morgan Chase. Do you guys see that? So this is actually a trade that I'm keeping an eye on. And interestingly enough, JPM is, with the move today, is getting very interesting in this range, getting very, very interesting. Okay. All right, UNH. Let's take a look. So UNH, United Health. Here was a scenario. You had a low being made, and then you had a bounce, so it creates a little bit of a valley. That's fine. The distance between this pivot low and this pivot low is at least a month. That's good. You have an oversold RSI below 30. And now as you're making a new low, RSI is touching the 30 line and starting to inch up. This tells you to go long UNH. Okay? So interestingly enough, that would be a long situation right here. And it would tell you essentially you would go long. So the trigger in here, this is important, guys. Remember, where do you get triggered on the trade? The trigger on the trade is when the previous low pivot is violated below. So you'd probably jump in this one right here. So it did go a little bit lower, and now you're already in the money. And I believe this had actually a decent little move today. We'll take a look in a second and see, but that's important. In fact, let's look right now. Let's go here on UNH and see what we have on that front. And look at UNH, guys, up $17 today. How about that? In fact, let me just put this into one chart here if I can. We'll just do this as big as we can. There we go. So we have one big chart. So again, in this scenario, going back to UNH, it was a buy at a violation of approximately 220. It went down to about 214. Now, arguably, is that 3%? Yeah, about 213, 214. So you might have even added here. But then look at what happens. I mean, just today alone, UNH back to it hit almost 240 today. I mean, it's incredible. Absolutely incredible. All right, so really kind of cool stuff here. And again, I will continue to look at some charts. So that concludes the actual presentation. What I want to do now is go through some charts with you guys and answer some questions. But what we're going to do here, first and foremost, let's look at some of the. So we'll actually take some charts that you guys want. But let me answer a couple questions here. Ed saying, think Apple is showing this signal for a short side. Okay, good. So we can take a look. In fact, let's do it right now. Let's look at Apple. So let me bring up. And this website is the one I utilize, guys, because it's already kind of set up for you. So if you just type in, so stockcharts.com, they didn't pay me to promote them. It just happens to be the one I'm using. All right, so let's take a look. So in the short term, here was a little bit of a pivot high. It didn't get above the buy side, though. Okay, now it did back here. But considering it made a new high here, it wouldn't be something that I'd probably follow at this point in time. All right, so right now, again, I don't have that overbought divergence just yet on this chart. Now, you did have it back here when it got to about 213, 2 and change. But again, because it made a new high and then pulled back and has continued, I'd probably reset on this chart. Okay. Doug saying, already check weekly chart direction. Then I do the same thing on 1 hour chart for swing trades. What's the difference then using 52-week highs and lows? It's just more accurate, Doug. I mean, this is what I'm teaching you guys here is extreme accuracy. You can go back and test it out. It's just that good. Okay. All right. So let's look at a couple other charts here. I have a list of charts that I wanted to go through with you guys, just with some randoms. Let's take a look at Adobe and see what Adobe's showing us here. All right. So in this scenario, and let me get rid of this. In this scenario, it looks like you made a little bit of an overbought over here, and then you went a little higher. So you could have taken the trade right at a Pierce of about 295. So I mean, you'd be up on it. You actually would have been able to add your second half right up here as well. So yeah, it's playing out. But again, ultimately it plays out. But I would probably use closer term supports or levels being broken. Mac wondering about is saying, is there any, or Steve saying, is there anything you look for an exit once you are in a trade? Yeah. You always want to look at supports or resistance. So if you're going long a stock, you want to be aware that if a stock is at 52-week lows or new all-time lows, it probably is not going to just zoom up 100% for you. So I do advise, just like, in the charts that we were showing, how when you got to a level of either support or resistance, you would want to take your money off the table there. I mean, if you really want to be patient, you can just let it do its thing and obviously have a trailing stop, but I like to just take my money and run, okay? Yeah, let's take a look at the Walmart chart. Let's see what's going on in Walmart, see what's there. See what we got on that. All right, so Walmart, interesting. So you have a high pivot here at 114 that was overbought, and it does create a peak, right, a mountaintop. So now as you've come up, your first short would be initiated right here at around 117 to 118, okay? Now, being a large cap, you'd look for a 3% rise to initiate second half. Now, can anyone tell me, has this failed? Would you have exited this short at any point from this pivot area here? What do you guys think? No, yep. Tom is saying no, Steve, no, yep, Nipur, Ed, excellent. Yep. You would never, because you never took out this high, and obviously it's only against you by about $2 at this point. Maybe only $1.50. So it's not obviously, you haven't even entered your second half short at that point. So this does fit. This does fit. And I love this on the short side, folks. I love it on the short side based on this and actually some other signals as well. But yep, this would be something that you'd want to be in on the short side using this method, absolutely. So again, you got your mountaintop, then you made a new high that initiates the short. And again, if it ever gets to the point where you're 3% out of the money on a large cap, that the rules dictate that's when you add your second half, which gets you a better average. And we'll see. Let's watch this over the next couple of weeks. Let's see if it rolls over. Be very interesting to see that for sure. Okay. Let's look at I don't know. Let's look at SLB since I have that in verified investing. Ah, look at this. Wow, that's kind of crazy. So interestingly enough, here it was oversold at this low. Then you kind of kissed the low. Then you came down here. I believe it did make a slightly lower intraday low. And look, RSI never got there. Got to 30, that's it, and turned up. And look at the stock price moving up beautifully. Sure, Eddie, let's look at Tilray. Let's see what Tilray says. All right, so Tilray, here's a low pivot here. Never gave you a valley, right? So see how you got oversold? You got just below the line right here. This is actually a great example, Eddie. Fantastic example. Glad you brought this up. So it's below on the RSI, below 30. So that would make me just keep an eye on it, because then if it bounced and it created a valley, then if it did get down to that 30 level again, then I could go long, right? But in this scenario, it didn't create a valley, right? Because it continued lower. So it doesn't initiate. This is actually a great example because it shows in this scenario how you must be firm when you see a valley or a mountaintop. It has to have a valley or a mountaintop, okay? Now, here it comes up a little bit. Now, you did create a valley here, but you weren't really below the line there of 30 in the oversold category. Now, you've come down here, and you started to bounce, and you've got the oversold nature of this. So now what I would do is I'd start paying attention to this. Now, I'm already in this trade, actually, and I actually love it. But in the scenario of this signal alone, this would be one of those scenarios where if you get a valley here, let's say you pop back to 25 and you create the valley, then on a pullback, that would be where you start watching it. So that's a good one. That's a really good chart. Doug saying, what percentage bounce sell is considered a valley or a mountaintop? Basically, you just have to look at it, and it should jump off the page at you. If it's even a question mark about it, then you kind of want to steer clear. So you can see here how it should be pretty vertical. Sharp drop here, but then you look over here, right? It had one up day. I wouldn't consider one up day a valley. You can't be like, oh, look at that valley. It was a one up day. It should be pretty clear on that front. So here you had a significant bounce. I think the stock went from like 25 to 32 or something. That would be considered a significant, valley that you'd pay attention to. But again, the key is you wouldn't pay attention to this. You'd actually cross it out because you never got underneath the 30 level on the RSI. The RSI has to be below 30 on this for it to have the highest percentage win rate. Okay, so that would have kept you there away if you wanted to. And then here now you'd start paying attention to it right in this scenario. Okay. Question is, did Tilray signal a sell in June? Nope, no sell in June. It never got above the signal there. So this wouldn't have been something that you would have wanted to go short per the signal. Now, obviously, it still played out to the downside, but per the signal, it would have never told you to go short on it. Okay. Thomas saying, what I meant was it below 30 there? Yeah, so over here, you actually did get a scenario of a below 30. Yep. So if you go back this far, in this scenario, this is actually a good scenario of that as well, because here it's below 30. So that would, and this would classify to me that it probably a little bit of a valley, and then it rallied up, and then it came back down here, but it was never at a lower low here. See that? And then it rallied up again. So you never made a lower low than this pivot low with this little blip. Okay, and then it kind of rallied up. Now it did come down here, but look, it got below the line. So it doesn't hold the criteria there, right? You see that, August? See that, Thomas? So remember the definition. The definition is that on the retrace, you can't, if it gets below the line, the 30 line, you do not take that trade. So here it was making a lower low than this pivot. So here's your pivot. Here's a lower pivot over here, but look, it got below the line. So that would keep you away from that. Okay. Awesome, guys. Great questions. All right, bear with me as I got a lot of questions to get through here. Andrew saying, do you have any specific stock screens that you use, or do you just manually check charts? Yeah, generally I just manually check charts. But you guys should all, if you have any decent software, you should all have scanners of stocks making 52-week highs and making 52-week lows, and you can do that. But because I'm trading 24, I mean, essentially I'm trading every single day. I'm studying charts on the weekends. I kind of already know in my head, it's like, okay, I know Procter & Gamble was making a new high, or this stock is making a new high. Occasionally I'll go to those lists just because there are some smaller stocks, some mid caps and so forth that I might not realize. And then that'll be a good way to do it as well. But again, if you don't know that, if you're more of a swing trader and you work during the day and you're not kind of enveloped in the market 24/7, then you could just use that scanner, or you could probably type in on Google stocks hitting new 52-week lows or stocks hitting 52-week highs. Okay. Yeah, Andrew saying you look at least 1 month between the higher high or the lower low. Would 3 months max be good? Yeah, I think that's fair. I mean, to be honest, you could even be a little bit longer. But I think, you want it kind of in that mid-range. You don't want it like 5 years later. To be honest, that's probably way too far. So I like that of between 1 and 3 months out for it. That's a good way of putting it, Andrew. Max saying, would Viacom on your watch list for a bounce looking at October low? Sure, let's take a look at Viacom. So here we had a low, so pivot low, and then you came down and you went below this low. So at this scenario, now that I'm looking at this, I would not go near this at this point, okay? So it wouldn't be a play at this point. Now, would it be on my watch list for a future pivot? Yes, it would be. Absolutely. Absolutely. So that would be a great one to keep on your watch list. So notice how you're at a low pivot here. You've been below the line. So this would essentially go on your watch list. And then what you'd want to do is, make sure it's a month apart. So you don't want it like in the next day or so to make a new low. And then keep an eye on it, a month from now or even 3 weeks from now, start watching. On your watch list for a bounce looking at October low. Sure, let's take a look at Viacom. So here we had a low, so pivot low, and then you came down and you went below this low. So at this scenario, now that I'm looking at this, I would not go near this at this point, okay? So it wouldn't be a play at this point. Now, would it be on my watch list for a future pivot? Yes, it would be. Absolutely. Absolutely. So that would be a great one to keep on your watch list. So notice how you're at a low pivot here. You've been below the line, so this would essentially go on your watch list. And then what you'd want to do is, make sure it's a month apart, so you don't want it like in the next day or so to make a new low. And then keep an eye on it, a month from now or even 3 weeks from now, start watching. Okay. MT saying, is there also a certain amount of volume that you need in the stock? So in general, yes. I mean, if a stock trades 10,000 shares, I mean, there's just too much room for manipulation. The beautiful thing about what we do is that we want lots of participants because it gives us a clear picture of the overall market. So if we have a scenario where there's only a few shares traded a day, one seller of 10,000 shares could manipulate the price and therefore manipulate the RSI. So I agree with you. I would say in general, I would stick with 500,000 shares or more a day. Ideally 1 million or more, but I think we could stretch it probably to 500,000 on a daily basis. I do think that the lower the volume, so once you get down to 500,000 or even less, your odds of success using this will be lower just because of the factors of, one seller can manipulate the RSI, so it can give you a false reading. Yep. Andrew saying, appreciate all the insight that you and Nick teach us. Thank you all. You're welcome. You're welcome. Nipur saying, how do you trade the spiders intraday, short swing? So overall, to be honest, I'm not a fan of using this on an intraday basis. I found that, at first I was like, okay, on any time frame would work. But the more I was watching it intraday, because you're trading it with a day trade, so the idea is you're in and out in a day, intraday, meaning that you're not holding it overnight. You oftentimes can't you're restricting your time of being in the trade. So like, let's say in the late afternoon at 2 o'clock or 2:30, the signal triggers. Well, what if it kind of meanders up a little bit, down a little bit, kind of goes sideways, and then it plays out tomorrow? But as a day trader, you need to close that trade by the end of the day. So to be honest, I would use this on the daily chart. I wouldn't use it on the intraday for day trading. Okay. Alex saying, would this work on indexes as well? Absolutely, Alex. Yep. So indexes, ETFs, cryptocurrencies, pretty much everything. Everything you guys can think of, as long as, again, it has volume behind it and you can get an RSI on it, then it will work. Okay. Does anyone have any specific questions on this tactic in regards to anything that you didn't understand? You want to review anything? But I think it's pretty clear, right? You're basically looking for a divergence. There's specific things that you have to look for within that divergence. For instance, the RSI has to be below 30 on a new 52-week low or all-time low, and then the next time down, you don't want to see it get below 30 for it to trigger. If it gets below 30, step aside. But if it doesn't, if it stays kind of right at that 30 level, it's okay. Now, if you do get in a chart, all right, this is key. This is probably something I didn't make clear. If you do get in a chart, okay, so let's just look at Viacom here. Let's just say in real time, here it got below. So we're looking back, we saw this get below, and then here's a valley, right? Now here it comes down, and right here, it looks like it's kissing 30, but now what we want to check is it making a new low? And right here, it wasn't yet. So here, finally, it breaks down here. So now let's just say you weren't 100% sure, and you just took the trade anyways. So what would you do? Well, here it got below, but the question is, did it stop you out? What's the stop signal? The stop is if the RSI ever breaks this low. Here it didn't. So technically, you could still be in this trade. It still tells you that it can be okay. All right. Now, again, it's not the ideal, but it's still okay. Okay. Ed's saying if you have a pierce to the RSI and on the following 52-week pivot and it hits the 30 or the 70 but does not break, then does it again with another 52-week pivot. Are we safe to continue to use this tactic? So I think what you're saying is if it does it over and over again, is it okay? So the idea being that if it hits the 30 level, let's just say on a stock that's hitting new lows, so it's hitting the 30, it doesn't break, so you would initiate in that scenario if the pattern line, if the RSI lines up and the divergences are there, you would take that trade. All right, now if it goes up and it comes back down and tags 30 again and it makes a lower low, you'd still be in that trade because the stop didn't take you out with a lower RSI than the original pivot. So you could still be in that trade. Then you would utilize your potentially adding a half position. All right, the way you exit the trade, remember, is if that RSI, so here's your RSI low. Over here, if you went lower, then that would take the divergence away. So basically the idea of PPT methodology in this signal is that you're queuing off certain things. If what you're queuing off of that caused you to get in the trade gets voided and is no longer there, then obviously that would be the step aside signal. All right, in a situation, as I said, where in some random scenarios where the RSI never gets below that low, but the stock continues to kind of drift lower, for instance, it's very rare. You would just automatically say, okay, at 10% or whatever, I'm going to stop out of this. Now, the beautiful thing about this is this signal backtracks to work between 80 and 90%. So it's going to be a very rare scenario, but remember, there's no signal that's going to be 100%. So you always want to be aware of those signals, okay? You're welcome, Ed. Good stuff. Yeah, the lower RSI. So what starts on a buy signal, which would be a low pivot, is an RSI that's below the line, and it has to be a 52-week low or an all-time low. Basically, a 52-week low covers all-time lows anyway, so it'd just be a 52-week low. That begins you watching the chart. Then you need a valley, and then you need a scenario where it comes back in. So if we go back to like the Uber chart, for instance, here's your break of that level right here, and then you can see the valley forms. So that's another checkpoint off your checklist. Then you come down and you make new lows. RSI doesn't break 30. You start your initiation of the trade right here. And you can see, look at Uber today, man, 32 bucks. So in this scenario, your initial buy would have been at about 30 bucks. And then you could have added, based on this being a mid to large cap, you would have added around 28, 29, 50 or somewhere in that vicinity, and then a move up. All right, let's see what we have here. Doyle saying, I bought ACB based on a beautiful bull flag on the hourly today. Let's check it. Sure, let's check it. And these are great stocks to look at because they were all making new lows. So in this scenario, here was your oversold pivot right here, your last oversold pivot where it was making a low. All right. Then it came up, but notice how there's not enough distance between. This isn't a month from between this low and the current low. There's not enough distance there. Remember, it has to be at least a month, ideally between 1 and 3 months. So in this scenario, you can see it got oversold again, but you wouldn't have initiated a trade off this break. So the idea being is if this RSI here never got below 30 and there was a month between it, then you would initiate it. But because there's just really about a week or two between these two, and obviously now we see that it got below, we wouldn't be queuing off of this pivot as a low pivot. Now this pivot could be. So now you reset it. So here you're below, here you're making a new low. So if ACB bounces and creates a valley, and then let's say in a month from now goes down and makes a new low, but the RSI doesn't get below 30, guess what you do? Initiate a trade there. Okay. Hey, thank you, Doyle. Appreciate the kind words so much. That's really sweet. Thank you. Okay. So really what you're looking here on ACB is this would be just something you check back in about 3 to 4 weeks and you see if it's setting up correctly. Tom is saying, is there a calculation for a target for the trade initiated by the signal? No, just generally what you want to do is you want to look at support and resistances. So that's what I always cue off of. So for instance, I mean, let's go back to, I don't know, let's see what's a good setup here. Let's go back to SLB. So SLB initiated here. So for instance, you see the 50 moving average at 33.86. That would be your first resistance. So if you bought it, based on this signal, initiated right on this break point here. Now again, notice here was your lower pivot at the low. Here it broke the low briefly, so you would initiate. Literally, you would have gotten in within pennies of the low if you just followed this signal. I got in a little higher because I was following fibs. But if you had initiated just at this low pivot, which by the way, if you notice when I bought my second half in verified investing, that's what I did. I basically got that low right there, and that was off this signal. All right, but in any case, the point being is that as it bounces up, here's your first resistance, the 50 moving average, or it could be the 20 actually. I don't know. What is it? It's the 50. So 50 at 33.86, that would be your first target. You could either take it all off there, take half off, or if you're extra bullish, you could always let it run. Considering the market, considering oil's performance, I'd probably look to take it off there at around 33 and change on that situation. But again, I think that's the key is, we don't want to get to the point where, we're just because this signal triggers doesn't mean the stock's going to go from 52-week lows to 52-week highs, right? I mean, you still have to be cognizant of the chart levels and resistance points coming up, just like on any trade. Okay, perfect. Yeah, Uber was a great example, and actually so is this SLB. SLB is a really fantastic example of this. Doug saying, just to verify, a break of the 52 week or 52 week low is a intraday or a daily close. So it's an intraday basis. That would be what it cues off of. So in this scenario, let's say you have a pivot low from a month ago at $20. If today it breached that low, really technically, as soon as it breaches that low by a penny, now you might, as a trader, you might put it 25 cents lower. That's up to you, wherever you want to throw out your limit order. But technically speaking, it's any violation of that low if and only if the divergence is there. So a good example would be here is that if you look, in fact, let's go to SLB. I want to show you this here. So here in this scenario, let's put a line here. So you can see SLB did technically close below it, but it barely did. But really just the violation is what triggers your first half position. And again, be aware that's only if the divergence is there. If the divergence isn't there, you don't step up at all. But you can see it just went below by a hair and then has rallied up nicely off of that because, well, not just because, but one of the signals there is that divergence. Okay. Mark saying, can you use this on a higher time frame? Yes, you can. So weekly and monthly is okay, but just remember, you're going to be, what I would generally recommend then is, so remember how I talked about how when you have a large cap, when you're out of the money 3%, you add, when you're at mid cap 5%, small cap 10%. If you're going to use a larger time frame, you have to understand that there'll be more volatility there because you're using a much bigger time frame. So I would expand that to probably for large caps be at least 5 to 7%, maybe double it, maybe 6%, mid caps 10%, and small caps 20%. Because again, the larger the time frame, I mean, things can whip wildly intra-month, but the candle may still hold and the divergence may still hold. But you just have to be a little bit more protective of it on the larger time frames. Sure, let's take a look at Cisco. Let's see what we got on Cisco here. So it's hard to see on my chart, but it looks like Cisco would have triggered here because here was your violation. So here's your below the 30 on the RSI, and that matches with this low pivot. So you had a sharp drop and then some chop, and then you did create a valley. So here's your valley. And then it went down here, and assuming it made a new low, I'll look on my actual chart in a second, but then you were above 30. So yeah, technically this would be a long. Let's go and just double check that you broke that low, because that's the only important thing that I see here. And look at this. Yep. So look at that. So you would have technically initiated like right here, right at around 40, 46, it would have initiated. And so you'd be up a little bit on this trade thus far, but I guess let's watch and see. Now, the only thing that is a little nervous to me, and again, this is where the rest of trading has to come in and you have to kind of be aware. The only thing that makes me a little nervous here is that the moving averages are so close to current price. So this might be a scenario where it bounces into this area and then you just take your money at 48. because it's asking, if it was just one moving average like the 20, maybe it blows through it, but having two, the 20 and the 50 there is pretty tricky. So it'll be interesting to see if it does bounce into there, and then I'm curious if it falls through at that point. After that point, interesting. Tony's saying, what about TVIX? So with TVIX, don't use it. Don't use it on a double or triple, in my opinion. Q off the single. So really, the VIX would be the ideal one to go to, but the VXX can be utilized as well. But even the VXX is so wacky. You just got to be real careful about using this on that kind of thing. Let me just bring up my stock charts. We can punch in VXX just to see what the heck it's showing us, but I don't think it's showing us anything significant at this point. Yeah, the VIX is a very weird index or tracker. So right now I don't see anything over here, and it's kind of been just meandering in the mid to, it's overbought a little bit and then underbought a little bit, or oversold and then kind of just going sideways. But I don't see anything too significant there. Hey, thank you so much, Mark. I appreciate that. I appreciate that. Alex saying, so a violation of price at any time during the day on a long RSI above 30 or 70 on a short at that time, you'd enter the first half. Correct. So the violation of price triggers your trade, assuming the RSIs match the proper divergence levels. Correct. Okay. Excellent, guys. All righty. I think I'm going to step aside. We'll call it a day, guys. Thank you so much for coming out. If you do have any questions, feel free to email me. But I'm glad and great. Thank you, Alex. I appreciate that. Thank you so much, Thomas. And again, guys, great seeing so many of you guys in here. And again, you will get the recording of this, so you can go and recap and go over everything. And yeah, just overall, guys, great job. Great seeing you guys. And thanks for coming out. Have a great one, guys. Take care.